Coming up in this show, I have my opening comments on the markets. Harvey has a sample of a member video where he looks at gold stocks and he's going to show you Barrick Gold, G-O-L-D. You're going to like that analysis. I'm going to bring you a hot minute still talking about gold, and this time looking at dollar momentum and how that favors gold right now. And then I'm going to give you my short-term analysis of the stock market.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market moved lower and early in the week as a warning came from UPS, and that sent the transportation index down sharply, and the crash that we saw again in First Republic Bancorp as it loses about 2/3 of its value in just a couple of days, and that's down about 95% from its high, and that certainly spooked investors. Even great earnings from Google and Microsoft didn't really help, as early gains on Wednesday saw them melt away to some sizable losses in the indexes. Thursday, however, was a different story as Meta soared 14% on the day, and that led the techs upward on what I'm going to call, at least for Meta, an AI fantasy. They did have a good beat on earnings, and that's, of course, on all of the cost cutting that they've done. But I think Meta's a broken company. In the next 2-3 years, that stock will be much lower. Their AI dream is just very much for them and how it will affect that company. I think what the metaverse dream has been, and this company is the question is it survivable for the long term? In my opinion, I think they're going through an existential period in here, and the question is, can they keep themselves alive? I think they have a lot of troubles. Still, Thursday, with all of that, the market did have a huge day as GDP slowed sharply, and investors are looking at that and the prospects of the Fed pausing now, with the S&P index gaining on Thursday 2 full points and the Nasdaq up 2 3/4. It was a huge day to the upside as yields get weaker, and that's what happened as the bonds moved up, and all of this prospect of a Fed pause. Well, investors are liking that, and you'll see that as we show charts coming up just in a little bit. Friday, the market moved down on Amazon earnings. First, it moved up, Amazon, and then it moved to the downside as it warned of a growth slowdown and issues in the cloud area that is not growing as it was. Also, solar stocks got hammered as First Solar had a big miss. But energy was stronger, and Exxon moved up on a beat there. That left the indexes mixed here on Friday as we bring this late in the morning on Friday, with the Nasdaq slightly to the just slightly to the downside, and the S&P 500 moving to the upside as it does get help from the oils. If you look at the way everything is moving around right now with earnings and all of the geopolitical issues and everything that we're seeing on the interest rate front, I want to call this a period of chaotic balance as the market is firm to higher. Our analysis continues to point to an extension of the current bullish phase into the late summer. However, many cross currents that we're seeing are likely to keep the market choppy and range bound in coming weeks and even months. As the S&P 500 index moves up, we must be cognizant of the valuations right now, and certainly of the fact that the overweighting of Apple and Microsoft is having a big effect. The two of those companies together are now 14% of the S&P index. So a lot will be determined by the action in Apple and Microsoft. Our target for the year is only 4 or 5% higher. That has to give us pause about adding to long-term holdings, though I would say adding net, being selective is probably okay, picking the right spots, and I think one of those right spots may be just coming in about a month. Our analysis suggests after this upward impulse ends in the market that there will be a decline sometime into late May or June. If you want to see the detailed analysis on that, please, we did a rare thing. We posted the askSlim live, a replay of that, which we did this week on YouTube. So if you're not a member and you haven't seen that, then just go to YouTube and look at askSlim live on our channel. That's askSlim Team, and do subscribe. Make sure you subscribe to that, and then you'll see the detailed analysis on the S&P 500, Nasdaq, and Russell, and much more in that video, of course. And I'm going to discuss the short-term view for the stock market in just a few minutes. Stocks for the week, well, they're really little changed. S&P 500 just around unchanged. The Nasdaq up small. The Russell down, maybe a little bit more than small, as the low-cap banks are weighing on that index. And we'll show you in that YouTube video on askSlim Live what our projections have been for the Russell, and they have continued to show weakness in there versus the other index, and we have been spot on that. Bond market gains about 1.5 points as the 10-year yields fall by 10 basis points. Gold slightly to the downside as it moves close to our supports, and we think that an upside surge is coming. If you have not watched the little video that and the videos that I've said about that, as another one coming up just shortly, where I show you why I think the gold market is going to move up in relation to the dollar's action. I think silver is the same. I think they're both going to move up, but silver tends to get a bigger percentage gain. So we'll see about that. It also is fighting slower economies. So silver, I think, will move up, but the jury is out whether or not it's going to overperform gold or not. When you look at copper that is weaker, then you got to wonder about that because of the economics. But I think in about 1 to 2 weeks, we're going to see a bottom form in these metals and then moving up again. Dollar, it is in terrible shape. It's unchanged on the week. I think that it's going to get some small gains in here coming up, but then big down. And that big down, of course, well, think about what that does for the metals markets. Oil, well, that loses about 330 on the week. It's the second week in a row of a pretty good pullback. I think it is possible this correction pulls it back to 72, but then I think it's going to move back up into the 80s again. Please do to askSlim, go to askSlim.com, explore our websites, and make sure that you do subscribe and share this with other people. If you want to get acquainted, please subscribe to Level 2. You're going to get our full video library in there. An amazing amount of learning possibility for you. I've lost count, 600, 700 videos in there or more. There's so much in there, and at least 300 that are evergreen teaching videos. So you will love being a Level 2 member. Do subscribe to our YouTube channel, askSlim Team, and click the notification bell. Like this video, give it a thumbs up, and on Twitter, follow us at askSlim. Any questions about what I'm showing you in this video or about our website, write to Matt at askSlim.com. This is a special. RV is going to teach you cycle analysis in here, looking at Barrick Gold. I have been positive on gold. This gold stock video, which he shared with our level 2, 3, and 4 members, you can have by becoming a level 2 member. And this is just a sample of that, looking at Barrick Gold, the symbol GOLD, and that is going to give you an idea. And I'm following it up, actually, with some analysis on gold. So I think you'll love this segment and the one that is following. Show them, RV.
If we go ahead and switch over to GOLD, that is Barrick, and we'll pull up the weekly. This is acting a bit better, certainly. We will zoom out a little bit. I want to show you these longer cycles really very clear. Let's go further back. Now we're going all the way back to 2019. You can see these longer money flow patterns. That is this dominant cycle right here. Really quite clear. And currently we are still rising on the dominant cycle as well as this minor cycle. Okay, so you can see what's happening here is we are just forming what is likely a higher low flag, and we are looking for it to turn back up and move up to that 61.8 at around 2104. And you can see we have a zone right around that same area up to 2265. So looking for this to form that flag and to turn back up again, and then to put in that higher low base and then to turn up after that. So this is really quite positive overall here in Barrick Gold. There's a low that is due 619 to 731 here on the weekly cycle timing. If we go ahead and move on to the daily, let's just zoom out a little bit here. I want you to see these. So fairly clean cycle action here in GOLD. Now we'll zoom in a little bit, and you can see that there's a low due around now. There's a low due 420 to 51. We do now have a neutral slim ribbon. We do want to see that turn positive again to confirm that we are getting into that next short-term rising phase. We do also have earnings here. Let me get my cursor back. 5-3 in the pre-market, so we do have to keep that on the radar. We will not be putting on any kind of long idea until after earnings here. So we just have to really wait to see where this ends up after the earnings date. But overall, we're looking for this to turn up and move back through that 78.6 at 1996, and we have this old high at around 2028. And this is clearly a higher low base that has formed here in the short term in GOLD as well. We are looking for this zone to hold from 1884 to 1799 on the downside.
Great work on that. Absolutely fantastic. Now watch this. This is a hot minute, and I'm going to continue this focus on the gold stocks and gold as we look at the gold versus dollar momentum. This is really very interesting as we look at this quickly. I want to show you the gold chart right over here, and this is cycle analysis where we're looking at the rhythms in the market, and you could see the clear rhythms in the gold market right in here, and this right over here coming down to a time frame where a bottom is likely forming and getting ready to move up again as it comes down towards this support buy zone that we're looking at right there. I'll take a little closer look at that for you to see, and what we're looking for is coming down here and testing this level about 1973 and then beginning to move up. It really is resisting to that down move down there, and I want to show you why, because gold often moves opposite of what the dollar does. This is a very unusual chart. This is a momentum chart on the dollar, and you can see this overlaid right over there, that line that is gold. And I wanted you to see what happens when the momentum conditions are solid and moving up for the dollar versus when the momentum conditions for the dollar are negative. I've also put those cycles in here so that you could see the gold cycle overlaid also, and very clearly what you see is that when the dollar is strong and momentum is strong, as you see right in here, the gold market moves down, as you could see that line moving down right there. When the dollar is in weak momentum and moving down, the gold price tends to move up. We're looking back a whole year right over here, and I want you to see where we are right now as gold is pulling back a little bit into that support zone. Look at the momentum in here. You could see the slim ribbon in there pointing to the downside. On the bottom is the slim ribbon PO, which keeps giving these negative signals on the dollar right now, and that is essentially saying that in this negative momentum condition for the dollar, it is very likely that gold will be moving back up again and sharply, and we are looking for all-time highs in this gold move that we see right over there in that upward turn. That is gold versus dollar momentum, and that sets up gold market moving to an all-time high just ahead. All right, stock market analysis and projections for the S&P 500 first do read this important slide right over here, which gives you a good sense for how we approach our analysis. All right, stock market, S&P 500, short-term view of the S&P 500. Okay, so the last week we looked at the intermediate view. There's a lot of times that we put up charts that we mix it up. We put up the weekly, we do the NASDAQ and the S&P, or we just do the daily, as I'm going to do now in the S&P. And a lot of people say, well, you changed it. You know, you're not, this is different than when you said last week. I want you to be very careful and make sure that you understand the time frames that we're looking at, whether it is weekly or daily, whether we're looking at SPX or NASDAQ or SPY. So there's a lot of things that we look at. So please make sure that you have a good handle on what we're looking at before you start sending me comments. And yes, we do change our analysis now and then. We just move it over a little bit if the market tells us to do so. And I'll talk about that a little bit in just a moment. I'm going to switch this over from the gold chart over to SPX, the S&P 500. And what I want you to look at in here is this daily chart. And you can see what the cycle analysis tells us as we are looking at the daily chart and the rhythms in the market right in here. Essentially, that these are the cycle brackets on the bottom. These are not the cycles. These are just a guide for us to be able to see the energetic movements in the market and money flow. We also look at momentum conditions, support resistance levels, and what's very important is the shape of the individual cycles and where and if it breaks the previous cycle low. Like this one broke that cycle low right there, and it sent it down into the bottom of this period right here. This was a very bullish cycle with positive momentum, as you see the slim ribbon pointing upwards and these bullish signals coming from the slim ribbon PO, and that told you that this was a positive cycle. When you see the word swamped, it means that the energy from the longer time frames would not allow much of a correction. This is rare when it moves up only a few days, then breaks that cycle low, and then it says coming down again all the way to that cycle period. So as you see right in here, this was a very bullish cycle. Well, this is a very bullish cycle also. What I said was that the prospects of the following cycle being negative, like it was in here, are small. Why is that? Because the weekly cycle, the longer term patterns were correcting in here. In this case, the longer term patterns are rising and they are in positive momentum conditions, and the translation and configuration is positive and momentum positive. You could see this upward resumption signal with that arrow right on the bottom on the slim ribbon PO, and now we are only 2 days into this next rising phase. The problem is that it's moving up into what I think is a very thick resistance band. And it may actually have a pretty good problem getting up above this 4,200 area right now. Also, there's this area up right over here, which is right around that 4,300 area, and that is our target for 2023. But you can see by our short-term analysis in here, I don't think that's going to come right now. And the reason for that is because the FEZ and the Russell have troughs that are coming out over here in late May or early June. What that says to me is that this cycle right over here is likely to be corrective and get below this cycle low at 40.4935, but not yet. There's still time for this to be rising, and we can see that the market is still strong after gaining some 80 points right in here on Thursday. Now today, after being weak early in the day, the buyers are coming in, and right now in the late morning period as we come to midday, the stock market is strong again with the S&P 500 up 21. This is only 2 days into this rally. You saw this was a 2 or 3 day peak right over here. You might be saying, well, that could happen again. This was in a period of negative momentum for the weekly when it was correcting. This is in a period of positive momentum for the weekly where it is rising. And that's why I don't expect anything like that. More like it will move up in here, down again, up again, as it follows the minor cycle patterns in here. That's why we have this peak out over here time-wise, sometime out in the middle of May, and then this sharper declining period here towards late May or early June. And then after that, well, this is only supposed to be a short-term view, but after that would be the move up towards the high for the year that we're looking at. For the short term, we're looking for a rally to stall up in here, somewhere below or around the 4,200 level, then start to correct down in here. We'll be watching this support right over there. Let me just get this little closer view so that you can see where those are. That cycle low right over there that occurred 3 days ago, 40.49.35. A breakdown to that level would be negative. It would say that this cycle is underway on the downside. Until that happens, everything is rising. Daily momentum rising. Slim ribbon PO giving you bullish signals. Weekly momentum rising. Getting support right over here, and the configuration as very bullish as it only had this minor decline. We actually looked for it to decline a little earlier, but it got one more lift in here, and then came the 5-6 day decline that we were looking for, like had over here. But this much more shallow because it is so much stronger. So that strength, this configuration that we have in here on this cycle, says higher prices, and that's what we have believed. And that's what we think we're going to get. Again, we think we're going to stop under 4,200 in this move. We think it will chop around in here and then correct down into that May time frame, and then sometime out mid-June, maybe through August or September, another upward impulse is likely. Well, that's a bigger view than I thought I was going to bring you, but I thought that was important. That is the stock market, SPX. I hope that was absolutely fascinating information to you, because I want you to be illuminated by our work, and then you will be able to be far more successful. Please go to askSlim.com and subscribe. If you're new, become a level 2 member. Get our full video library, including Future Speak, every week. On YouTube, subscribe to that channel. Like this video, give it a thumbs up. Watch the member videos in the playlist and past shows. On Twitter, follow us at askSlim. And any questions you have on everything I just showed you right here, or anything about our offerings of education and analysis, please do write to Matt at askSlim.com. That's it. Pretty short show that I brought you today. I want you to be so careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.